Well, good day, subscribers. Hope you guys are having a great day out there. As always, today we're gonna do a viewer requested video. I received an email this weekend from an individual named Bernard, okay? Bernard, you know who you are out there, that said this, okay? Did Elon set up a trap for short sellers? Short sellers squeeze again. Hello, Jeremy. First of all, I love your channel, especially the Tesla related ones. Thank you. There was a short seller squeeze trap in 2018, which was kind of set up by Elon. Do you think this can now be the case again, he says, okay? And he starts going into 4 different points, which I'm gonna draw out here, on why maybe Elon has set up a short seller trap. And when you start putting the pieces together, it kind of almost makes sense. Now, you might ask yourself, does Elon really hate short sellers, and why would he hate short sellers? And the truth of it is, yes, absolutely. Elon Musk does not like short sellers at all. He's even had to get restraining orders on short sellers in the past who are harassing and stalking employees of Tesla. Some of these short sellers will go to any lengths to basically try to make money on their positions and whatnot. So needless to say, Elon Musk does not like short sellers. Like, imagine you have this company like Tesla, you know, this is Elon Musk's baby, right? And imagine every single year you constantly have these short sellers attacking your company, saying your company's gonna go bankrupt, blah, blah, blah. That's what Elon Musk has had to deal with year after year since basically he started Tesla. And if Tesla fails, then obviously the move to electric vehicles doesn't happen as fast, like the move to autonomous driving doesn't happen as fast, right? It obviously would hurt like Elon Musk's credibility in the business community, because then, you know, ventures like SpaceX wouldn't get as much funding and things like that. Like it would just be a really bad thing. So imagine this, so like put your shoes on like Elon Musk's feet for a minute, and just imagine you're Elon Musk, and imagine your company is consistently attacked by short sellers. Like, you're probably going to start to hate short sellers after a little while, right? And so that's kind of the situation there with Elon Musk. Now, we have seen recently Tesla stock bounce back quite a bit. It had bottomed out about $180 just about a week or so ago, and now it's all the way back up to $215. That's a very quick move in a very short amount of time, needless to say, okay? Big move in a very short amount of time. So let's start going through this. There's obviously some motive that Elon Musk could potentially have, you know, helped set a trap here for short sellers, okay? He says, step 1, stocks are going down drastically due to different reasons. Bad news, poor analyst recommendations. Obviously, we've seen, you know, a lot of analysts come out and downgrade Tesla or put these ridiculous bear cases of, oh, it's going to $10, $36. Like, just say $0. Like, if that's where you want to go with it, just say 0, okay? The China trade war and so on. Shorties can smell some good business for them. And obviously, in a situation like that, it's going to excite a lot of short sellers, right? They're like, oh my gosh, the market's going to move down. The trade war is going to get a lot worse. Let me jump on, let me start shorting whatever stocks I can. And if you're gonna short stocks, maybe Tesla's the first one you wanna attack, right? Because they just had an awful, you know, first quarter of the year. So it's like, oh, they just had a really bad first quarter. Let's go ahead and jump on that. It's an easy short candidate. You have all these analysts jumping on, you know, putting out these ridiculous bear cases of $10 and $36 and things like that. And so it's kind of a perfect scenario. If you're a short seller, you wanna jump on that bandwagon. And that's exactly what they've done, okay? Step 2, Elon spreads out an email about cash burn. Money only lasts for 10 months. In addition to bad news from analysts, journalists, stocks moving down even further. Obviously, that did happen, right? Elon sent out that email, and it was like, you know, short sellers went and ran with that and said, oh my gosh, Tesla only has 10 months to live, when that really wasn't the case at all. Elon was just putting it, basically at that time, whatever cash they had in the balance sheet, based upon what they did in first quarter, which was an absolute disaster quarter, which this should be by far and away their worst quarter of the year for many different reasons, right? He was basically just stating that if we lost that much money, we would basically have no money left at the end of the pie, right? But that's not taking into account the fact that the company can raise money whenever they want, issue new shares and things like that. So the fact that short sellers would jump all in, like fall into that trap of, oh my gosh, they're Tesla, they got 10 months to live, and if they don't, they might not make it. Like, it's just ridiculous that they would fall for that, okay? And we saw, obviously, the stock just moved down and moved down for basically a 2-month span. It went from $280 a share to $180 a share in basically 2 month span, on the back of basically the bad quarter, compounded with the analysts all coming out and saying, you know, they're putting out these bear cases around Tesla stock. You have the journalists or just like people writing negative articles around Tesla, which just scares people even more and scares a lot of the longs out of the shares, right? Gives the shorts even more power power. Then you have Elon Musk send out that email, and it's just like a full onslaught onto Tesla at that particular time. And that's how you get a stock to go from $280 to $180 and basically lose $100 per share in literally a 2 months time. Like, there's just like a compounding of bad news all at one time, okay? Step 3, as stocks are going down even more dramatically, more and more shorties come into the bubble. Short trading volume going up like crazy. Some sources indicate about $9 billion or short. And we got to ask ourselves, is that accurate? Well, let's look at some short numbers around Tesla, and these numbers are startling, okay? If we look at the short interest on Tesla shares, this was the last one that was reported May 15th. I wish they'd have the June 1st ones out, but short interest on Tesla, over 37 million shares, okay? And just a few months ago, you go back to February, it was at about 24 million shares, which 24 million out of Tesla's float is a ridiculous amount of short shares. But when you talk about 37, 38 million, like that is absolutely insane. If you look at a stock like Apple, Apple only has about 49 million shares short, okay? And keep in mind, Apple has a massive amount of shares outstanding. It's not even close between Apple and Tesla, who has more shares outstanding, okay? Apple shares outstanding are around 5 billion or just under 5 billion shares outstanding for Apple, while Tesla has under 200 million shares outstanding, okay? So, you know, it's a ridiculous amount, needless to say. As far as the percentage of float that is short, we're looking at 28%, like all the way up to maybe 30% with Tesla. And you look at a stock like Apple, for instance, only about 1% of the float is short shares, okay? So needless to say, like, obviously there's a ridiculous amount of people that are short shares in Tesla right now. And when you have that type of scenario, it means, you know, just so many people are negative on the company that if you start getting some good news, it could get really, really bad, really, really fast for the short sellers because they're all piled into this trade, which is obvious they are, okay? Step 4, Tesla harvests possibly a historic record quarter by sales and defends against shorties. Stocks are up. Shorties in a trap since they need to buy again at even a higher price. An upward spiral starts to boost stock price as it has been a downward spiral since, okay? So basically, if you don't understand like how a short squeeze works or how like these situations work, sometimes you're going to see a stock go up like a ridiculous amount. Like in a very short amount of time, you'll see a stock make a ridiculous move up, like in a few days span or a few weeks span. You're like, how is that stock going up that much? Or you might see a stock in a given day go up like 20%, and it's like, how is that stock going up 20% in one given day? That's ridiculous, right? Well, what ends up happening with a lot of these stocks is you get a massive amount of short sellers in a stock, okay? And basically, when a short seller has to cover their position at some point in time, they have to buy back shares, okay? So this is what a lot of, you know, newer people in the stock market don't understand is when a short seller goes to short shares out there, okay, they're basically like borrowing against shares and they're promising to buy back those shares at some point in time in the future, okay? So example, if you want to short, let's say 100 Tesla shares, all right, you must buy back those 100 shares at some point in time in the future. And keep in mind, the brokerage could force you to buy back those shares at some point in time in the future. So if your trade starts to go really bad and your account starts to go really bad, the brokerage could go ahead and say, hey, we're going to force you to buy back those shares. It's no different than when, let's say you margin out money. So margining out money is basically if you're going long shares. So let's say you were going long Tesla shares and you were margining out all your money on, you're basically taking out debt to go ahead, you know, through your brokerage account to go ahead and invest in more Tesla shares. Tesla stock kept to go lower, right? The brokerage could say, hey, you need to sell off shares or deposit more money. Same thing with shorts, but on the flip side, if the stock price starts to go up really rapidly and their account's being destroyed by this, a brokerage can say, hey, you got to cover those shares or you need to deposit more money into your account. So it puts a short seller in a really tough position there because they're like, okay, now I got to cover it like $275 versus, you know, I could have covered like at 180 a few weeks ago or something like that. Like it could be a massive move up. And when you have all those short sellers, you know, buying back shares on top of maybe buying pressure from folks in general who maybe have saw a quarter or something like that, or are kind of like understanding, whoa, things are actually a lot better than they seem. So you have longs piling into it, you have shorts buying back shares left and right to cover their position, and all of a sudden you get a massive, massive short squeeze. And that's why you see sometimes some of these stocks move up in a ridiculous amount of time and they just, you know, go up. That's why Tesla's one of those stocks. It's one of those stocks like I can imagine like Tesla month from now, I could imagine it being back down at $180. I could imagine Tesla being at 280 in a month from now. It's one of those stocks because the short squeeze can happen so fast that you don't know what to expect with this stock, at least in a short-term manner. It could be at 180, it could be at 280 in just a snap of fingers, and it can happen that fast, guys. And the question is, okay, let's say shorts, get squeezed out of this. Let's say stock's back at $280, $300 a month or two from now. Do shorts go ahead and then quit on Tesla? Do they finally say, you know what, I'm done with Tesla. I'm folding my hand in this one. I'm not going to mess with Tesla anymore. Probably not, okay? The thing about short sellers are that with Tesla specifically, they always are going to find a reason why they should short Tesla shares, okay? And we've seen this has been a losing trade for years and years and years, and the shorts have lost literally billions of dollars in this trade. And it's a tough situation because you are playing with literal fire when you're trying to short Tesla shares. Like, you are playing with fire because they have so much growth potential in front of this company, and they have so much demand for their products, as we've seen over the years with their numbers, and as we'll probably see in the future quarters. And wait till Shanghai gets up and running, and wait till Model Y comes out, and then really start to see the crazy demand. And so these shorts are just playing with absolute fire, and you're dealing with Elon Musk, who I would not try to bet against, okay? I would not try to bet against Elon Musk. That man could raise money in the middle of probably the Great Depression, okay? Elon Musk is a person that gets people to believe in him, and if you're betting on Tesla going to zero, man, you're betting against Elon Musk, and that's a really, really tough bet to make. So, even if shorts get squeezed out of this one and goes back to $300+ a share over the next few months, don't think all shorts are leaving the stock. They'll be back, and they'll have something in the future to point at and be like, oh no, now demand's gonna fall off, or oh, there was some fire, or there was a Tesla accident, or something like that. There'll always be something they'll point at to, like, in their mind, give them like this bearish thesis on the stock and why it's going to zero, guys. So that's just what it is. So anyways, I hope you guys enjoyed this. Let me know your opinion in the comment section. Love reading through the comments, not just for future video ideas, just to kind of see what your opinion is on a subject like this, guys. I would love to hear from you in that comment section. As always, thank you for watching, and have a great day.